Is the economy on the brink of disaster? We'll break down the latest warnings about a recession and what the housing market signals mean for your investments. Expert predictions on a stock market crash will have you on the edge of your seat, and we'll uncover what's next for Bitcoin. Don't miss this critical financial news review. Your wallet could depend on it. What videos will we cover in today's episode?
Today we're going to provide summaries of the following videos. First up, Trade Brigade's Matt covers the impending CPI report and key trading strategies. Next, Figuring Out Money's Michael Silva highlights stock market dynamics and volatility. Then, Eurodollar University's Jeff Snyder breaks down China's shocking economic turmoil. After that, ClearValue Tax's Brian Kim reveals why Americans now need $186 to feel comfortable. Finally, Bob Elliott explores the crucial concept of financial market liquidity.
First up, Trade Brigade's Matt covers the impending CPI report and key trading strategies. Next, Figuring Out Money's Michael Silva highlights stock market dynamics and volatility. Then, Eurodollar University's Jeff Snyder breaks down China's shocking economic turmoil. After that, ClearValue Tax's Brian Kim reveals why Americans now need $186 to feel comfortable. Finally, Bob Elliott explores the crucial concept of financial market liquidity. Welcome back to Trade Brigade on YouTube. Today, we're diving into the latest midweek market update with Matt as our guide. We're focusing on the big event tomorrow, the CPI inflation print. Matt's got some charts to show us and 3 trade ideas you won't want to miss. Ready to get prepped?
Absolutely. With the market sitting at all-time highs, tomorrow's CPI report could be a game changer. Let's dig into what Matt has in store for us.
So, what's the main game plan for tomorrow? What's Matt watching out for with this CPI report?
Matt's central thesis revolves around the CPI print. With energy prices up in June but a dip in service PMIs, he's anticipating a neutral CPI read. However, the potential market reactions could lead to significant upside or modest pullbacks.
Let's break that down. How's the market setup looking right now?
The S&P 500 is partying at all-time highs. Both the daily and hourly charts show bullish trends, and recent sessions have witnessed strong dip buying and minimal profit-taking. Classic bull behavior.
All right, so what kind of scenarios is Matt preparing for with the CPI?
He's prepared for all angles. A stellar CPI could push us higher, while a neutral or bad CPI might lead to a minor pullback. Matt highlighted the importance of pathing scenarios like gap ups and gap downs and how to react to each.
And what did he mention about market internals?
Market internals are looking rosy. Volume is up, tick readings are better, and the market profile shows a bullish double distribution day. All signs point to strength.
Time to pull out the crystal ball. What predictions did Matt make?
If we get a deflationary or exceptionally good CPI print, expect a gap up and continuation for the S&P 500. On the flip side, a neutral or negative CPI could lead to a gap down, testing lower supports. Matt sees these as opportunities to hop on board for the next move.
So, what's the final takeaway from today's update?
Matt wraps it up by emphasizing the importance of reacting to how the market responds to the CPI data, not trying to predict the outcome. He highlighted key levels and strategies for different scenarios, so traders are well prepared no matter what happens.
Welcome to Figuring Out Money on YouTube. Today's episode is a deep dive into the stock market's big moves and the upcoming inflation data, brought to you by Interactive Brokers, your go-to trading partner. Get ready, because things are about to get interesting.
Absolutely. Michael Silva is here to break it all down, from market expectations to the latest predictions by JP Morgan. Let's dive right into it.
So what's the main focus of today's video? What's driving all the excitement?
The core thesis is about preparing for big market moves driven by the anticipated inflation data and market trends. Michael's goal is to strategize around expected price movements and volatility, making the most of market dynamics.
Let's break down those key points Michael mentioned, starting with the inflation data and market predictions.
Right. Inflation data coming out tomorrow is crucial. JP Morgan has made key predictions about the potential price ranges we might see, giving traders a heads up on where the market could move based on this data.
And what's the current situation in the stock market?
The S&P 500 is hitting new highs, largely driven by the major tech stocks. It's a bit like the lead up to 2020 with suppressed volatility, making things look deceptively calm.
Interesting. But you mentioned rising volatility indicators?
Yes, the VIX and other measures are climbing, which usually implies more drama ahead. Despite the bullish trend, traders are prepping for potential turbulence.
Got it. And what about those expected moves you mentioned earlier?
Michael laid out expected moves for key indices like SPY, QQQ, and IWM. These help gauge potential price zones post-inflation report, setting up tactical plans for different scenarios.
All right, and any stock recommendations or strategies to consider?
Yes, Michael touched on opportunities across large cap, mid cap, and some lesser-known names. He also talked about how to position around expected volatility, emphasizing the importance of being nimble and proactive.
So let's get into predictions. What does Michael foresee?
First, market reactions to the inflation data will be key. Depending on the outcome, we could see either a continued rally or a sharp pullback. Also, keep an eye on the tech sector. Any surprises in earnings could shift the market dynamics significantly.
Wrapping it all up, what should viewers take away?
Michael emphasizes a cautious strategic approach. Lock in those profits, prepare for volatility, and stay proactive. With inflation data and earnings on the horizon, it's all about managing your portfolio wisely and staying ahead of the curve.
Hey there, and welcome back to the Eurodollar University channel. Today, we're diving into a jaw-dropping situation happening in China. Our main man, Jeff Snyder, breaks down the alarming economic moves coming out of Beijing that you won't believe. Stick around because this conversation is about to get real interesting.
Absolutely. Jeff unpacks some eyebrow-raising details about China's banking crisis and bond market rally. Trust me, this is a deep dive you won't want to miss.
So what's the heart of Jeff's latest breakdown? What's really going on in China?
In a nutshell, Jeff is highlighting the instability within China's banking system and their increasingly desperate economic maneuvers. The Chinese authorities are short-selling hundreds of billions of government bonds while their bond market is rallying, clear signs of financial chaos.
All right, let's dig into those key points. What's happening with China's banking system?
Well, for starters, Chinese authorities are making some wild moves, like short-selling massive amounts of government bonds. This is happening because people are flocking to safety and liquidity amid fears of bad banks, bad economy, and bad money.
Yikes, and what's the scoop on the economy itself?
The situation is pretty dire. We're not just talking about a deflationary mindset. There's actual deflation in consumer prices and a downturn in producer prices, too. This is a clear indicator that the economic conditions are worsening.
Sounds like they're in quite a pickle. What about the global impact?
Oh, it's huge! The fall of China's renminbi and Japan's yen suggests these issues are far-reaching. The strong US dollar is exacerbating this situation, putting additional pressure on global financial markets.
All right, time to peer into the crystal ball. What does Jeff see in the future for China?
Jeff's predictions are pretty grim. He foresees the Chinese economy continuing to decline as their measures become more desperate and less effective. There's a real risk of broader financial instability if these trends don't reverse.
And what about globally?
The global picture isn't much better. Jeff points out that the synchronized economic strains between China and Japan could signal a worldwide downturn. Expect continued demand for safety and liquidity, which will put further pressure on the global economy.
So what's the bottom line here?
Jeff's wrapping it up with a reality check. He's calling for cautious optimism, warning that China's desperate actions are a sign of deeper financial trouble. Globally, we could be heading into choppy waters, so it's crucial to stay informed and hedge against potential downturns.
Welcome to ClearValue Tax. Today's hot topic is pretty shocking. Americans now say they need $186,000 a year just to live comfortably. Can you believe that?
Oh, absolutely. Brian Kim dives deep into this alarming figure, explaining it's all because of inflation, making everything under the sun pricier. Buckle up, folks.
So what's the big idea here? Why this astronomical number?
The main thesis is that Americans feel the pinch of inflation so strongly that they believe $186,000 a year is the new comfortable. Brian argues this is due to the skyrocketing costs of everyday essentials, houses, cars, you name it.
All right, let's break this down. What's causing these numbers to soar?
First off, cost of living has gone through the roof. The median home price is now over $400,000, up from about $300,000 just before the pandemic. And cars? An average of $47,000. Even groceries and tuition prices are off the charts.
Those are some hefty price tags. What did the survey reveal?
Bankrate's survey shows a grim picture. Even the lowest income estimate among different groups is $171,000 a year. Compare that to the U.S. median full-time worker's salary of $59,500, and you see a massive disconnect. No wonder 3 out of 4 Americans are paycheck to paycheck.
It's like financial whiplash. What about financial success?
Funny you mention that. New definitions of financial success are all about surviving, living debt-free, having savings, and being ready for future financial obligations. Gone are the dreams of millions and eternal vacation.
All right, got your crystal ball ready? What are the predictions?
Brian predicts that the economy now favors those with money even more, thanks to financial asset inflation and higher interest rates. Those with financial assets will keep reaping the benefits. Plus, where you live matters more than ever. Costs in the Bay Area versus the Midwest are worlds apart.
So, wrapping it up, what's the final takeaway?
Budgeting is key, no matter your income. Brian offers a free budgeting spreadsheet to help folks stay on track. In a world where paying off a car loan is seen as a major milestone, financial prudence is crucial. Hop on over to his website to get that budgeting tool for free. Stay smart with your money.
Welcome back to the Bob Elliott channel on YouTube. Today, we plunge into the deep waters of financial market liquidity. Bob Elliott is here to demystify this complex, yet incredibly crucial topic. Ready to get enlightened?
Absolutely. Bob unpacks the concept of market liquidity, explaining how central bank actions and the private sector's responses are key players. If you've been wondering why liquidity matters or how it affects your investments, you're in the right place.
So what's the main takeaway from Bob Elliott's deep dive?
At the heart of Bob's message is the importance of financial market liquidity. He explores how the interplay between central banks and the private sector influences liquidity, impacting everything from risky assets to broader economic trends.
Let's break down those key points. First up, liquidity dynamics. What did Bob say?
Bob highlights the twin roles of central bank policies and private sector reactions. When these forces expand liquidity, risky assets like Bitcoin and emerging markets thrive. Conversely, when liquidity tightens, these assets are the first to falter.
Interesting. What indicators signal that liquidity is turning?
Bob points to several canaries in the coal mine: the depreciation of the yen, Bitcoin sell-offs, and underperforming high-risk assets. Meanwhile, core indices like the S&P 500 might still be holding up, a classic sign of a brewing storm.
He drew some historical parallels, too, didn't he?
Yes, he did. Bob draws lessons from the 2008 financial crisis, showing how core markets can initially stay strong while peripheral ones crumble. He warns against dismissing these signs as mere one-offs. They might indicate a larger trend.
All right, let's talk predictions. What does Bob foresee?
Bob speculates that if tightening continues, core assets like the S&P 500 might start feeling the squeeze, affecting the broader economy. He also leaves room for short-term factors like quarter-end adjustments to play a part in what we're seeing.
So how does he wrap it all up?
Bob concludes with a wake-up call for investors. The signs of tightening financial conditions are there, and while the jury is still out on the broader impact, it's crucial to stay alert. Keep an eye on both systemic indicators and specific market trends.
In this video, Matt from Trade Brigade discusses the potential impacts of tomorrow's CPI report on the S&P 500. Michael Silva from Figuring Out Money highlights the current stock market dynamics and predicts volatility in light of upcoming inflation data. Jeff Snyder at Eurodollar University warns of China's deepening economic crisis and its global implications.
Brian Kim from ClearValue Tax raises concerns over the staggering cost of living in the U.S. Finally, Bob Elliott breaks down the pivotal role of financial market liquidity and offers cautionary advice. Stay tuned for detailed insights and diverse perspectives on these pressing financial issues.
They both see financial stability being very volatile due to issues with U.S. debt. They also both suggest commodities as a safe haven. Steve Hanke believes gold is the best safe asset, while Doomberg prefers natural gas due to its increased use as a replacement for oil. Thanks for watching Financial Analysis in Review for July 11th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.